Hello traders, and welcome to yet another video. Forgive my voice, I have a very bad flu, but we got this. Okay, so today I want to repeat about liquidity. Someone asked me about liquidity, and I think it's the high time I repeat it slowly by slowly, one by one. Okay, so the first type of liquidity we're gonna start with is trend line liquidity. I believe we have traders who take their trades from trend line. Trend line is just a situation whereby you can draw a straight trend line from one point to another, whereby the market is touching your trend line maybe once, twice, three times. I don't know how you guys take trades from trend line, but I can identify trend line liquidity. Okay, so for someone this will be an entry. If the market taps this line twice, thrice, for some reasons, some traders will believe that the market will come tap that trend line again and buy if it was in a bullish market. If it was in a bearish market, some traders will still believe for some reasons if the market touches the trend line or more than 2 to 3 times. I don't know how many times. All I know is that we have some traders who take their trades from trend line. But for me, as an SMC trader, I wait for the market. If the market was bullish, after my analysis, or for someone who takes their trade on a trend line, once the market taps your trend line, of course you got to take that trade. I don't know how you guys take trades from that, but of course everyone has their own way of analyzing the market and taking the trades. The end goal is making some profit. Okay, so for me as an SMC trader, if this was my point of interest, where you can see the order block, I will comfortably wait for my market here, or for the market here. It's not my market, forgive me, pardon. I will comfortably wait for the market here, simply because I can see liquidity above my point of interest. For someone who is asking what's liquidity, liquidity is like fuel. I've seen my neighboring country, Kenya, striking because of fuel prices. I believe the country is in a standstill because people are striking for fuel prices, which have gone higher, which have increased prices by almost $1. That's crazy. Okay, so just as you can see hiccups in that country, the same way it happens in the market. For someone who takes trades from trend line, they will place their trades above my point of interest. Why? Because the market tapped their trend line. For some reasons, or I don't know, for some reasons the market will give you money, but not always. If the market gives you money for after analyzing with a certain strategy, you tend to be so confident and wait for it there. Take for an example, if someone plays the trade where I'm trying to draw, they were expecting the market to go point of reversal and give them money. But what did the market do? It went up with few pips, came back again, bought, and for me, I feel before I used to struggle a lot when identifying this type of liquidity, and once I mastered it, back in the days I used to say it's like gambling. Trendline liquidity is like gambling. You're just waiting for the market at a certain trend line or at a certain line. So you're expecting the market to tap there and buy. If it doesn't, you're out. If it buys, you're in with profits. So to avoid that, I think I only studied one strategy, because the person who introduced me to forex trading didn't show me any strategy. I was taught candlesticks only, and that's why I keep telling you guys to be selective with the people who are training you, because after learning candlesticks, I was so confident to enter the market with my real money, not on demo. And I came to realize that the market doesn't recognize candlesticks. There's nowhere in SNC strategy have ever seen myself consider candlesticks, whether it's a big or small. I don't know. That guy messed me up, but it's okay. At least I learned. If he didn't mess me up, at least I would not have learned how to trade. And it's life. Be selective with whoever teaches you how to trade. Make sure that they have a strategy. I actually didn't know about strategies. He used to tell us, you got to have a strategy in the market. You got to have a niche in the market. And it's life. It's life. If you're interested with forex classes, you can email me. The email is on the description box. Another type of liquidity that I make sure that I master very well in the market before I place my trades is equal high and equal low. That's self-explanatory, because equal high means there's a point where the market is going up, and once it taps there, it's going back. It goes up again to that level and it goes back. That means equal high. On the other side, equal low means the market is selling to a certain point, then it tries to push up, goes back again to the same point, pushes up again, and that's what we call equal low. Okay, so you can either have rarely will you have a both at the same time. You can either have equal high or equal low. And for me, I don't take trades not unless all my confluences align. Okay, so whatever I have drawn here, have drawn it because you can clearly see the market is going up, tapping a certain level, coming back, going up again, and this is a good example of equal high and equal low liquidity. Okay, if you are in a bullish market, you expect the market to come down, and before it taps your point of interest, if there was equal low, demonstrate practically so that at least everybody will be on the same page. Okay, as you can see, the market was going up, back, up and back again, and for some reasons the market broke the structure. We got a break of structure. Let me put this well. So if you it's okay. So as I was saying before I got disconnected, the market broke a structure, and that is why you will realize that once the market breaks structure, it's a very nice opportunity for you to wait for the market at the order block that caused that break of structure. I don't know if you can get what I'm saying. Let me just illustrate to you practically. Okay, just a minute. As you can see here, the market broke structure. Okay, meaning the trend that was there before, whereby the market was going up down, for some reasons the market broke that trend or that tendency. So you got to wait for the market at the order block that caused that break of structure, and this is the order block. What did the market do? The market came, tapped the order block. It went up a little bit. Let me just show you. Does this strategy always pay? I don't think there's a strategy which is 100%. Sometimes it will give you that money. Sometimes it will not give you the money. Because I trade SMC, I wait for the market once I see this type of a break. And sometimes the market gives me money. Some other times it doesn't, and it's okay in the market. I believe we are all speculators in the market. No one can say that my analysis are 100%, like I get them all the days. I'm just in profit. There are those days you got to hit a stop loss, okay? So this is what happened. Let me arrange this well and show you what actually happened. So once the market broke structure, I waited for it at the order block that caused, sorry guys, I waited for the market at the order block that caused the break of structure. So this is what I mean. This is the break of structure. Excuse me. Excuse me. Yeah. So once the market tapped here, it gave us a profit almost towards the TP. Yes, the market didn't reach the TP, but it was just a quarter way to the TP. So for any normal trader, by this time you'll have booked partials. You will be on break even. So even if the market goes back, you are still in profit and you've made something, okay? So the last time of liquidity, if you have any question, leave it on the comment section. And also if you're new here, make sure you subscribe and turn on the notification bell so that anytime I upload a new video, you get notified. It's my hope that by next video, I'll be okay and my voice will be clear. I'm actually struggling to make this video, but we got to do this. So the last type of liquidity is inducement liquidity. What is inducement? Inducement is a situation whereby you are waiting for the market at a certain level. And just before the market reaches your level, it pretends to be buying, assuming you are in a bullish market. I love buys. I love bullish market. That's why most of my examples are for bullish market, okay? So you are in a bullish market. And just before the market taps your point of interest, you realize that it is a few inches to tapping you in, then it buys and pretends to be leaving you behind. And because you have FOMC, you have fear of missing out, you'll jump into the market. If it was a buy, you'll place that buy. And what will the market do? The market will pretend to buy, wait for you to get in. After you've set your stop loss, that's when the market will go back, clear you out, tap your original point of interest, then buy as you expected before. These are the type of liquidity that used to trouble me when I was a beginner. And once I learned it, it was a game changer for me, because if there's something that I really struggled with was identifying or mastering liquidity. Learning the strategy, anybody can learn it. But for me, what I really took some time to master is liquidity. Let me know what really took time for you before you learned how to trade, because I believe everyone has something that really troubled them, and now you look back and say, this was just simple. I wish I just did it. So this is what I mean when I talk of inducement liquidity. Let me place this buy well. So when the market reach here, for someone who has a fear of missing out, you will place this trade because you think the market is leaving you. I used to get confused. Like, I have analyzed the market so well. the market is just about to leave me, then I'm like, I would rather place this trade and have a very big stop loss. But back in the back at the back of my head, I'm like, how about if the market goes the opposite of what I'm expecting? I'll have to lose a lot of money. Okay, so for this, for the entry which is above, that is inducement liquidity. Let me try and draw an order block. Look at this order block. Someone will see the market reach here and start buying, then think the market has left them. That was me. I really can't laugh at anyone who is doing any or making any mistake in the market. There's no mistake you are making which is you can call yourself as a record breaker. Everyone passed through that. Whatever the mistake you're making, just learn from that mistake, but don't take too long to learn from your mistakes. Sometimes you got to say enough is enough and make that money. Okay, so if you took your trade from this inducement, what will happen? The market will wait for you to set that stop loss so well, clear you out, come and tap at the original entry that you are waiting and go to your direction. If you had only one bullet remaining, remember you are in loss and the market has eventually gone to your direction. So what does this tell you? Inducement liquidity really tunes those people who are bad at patience. If you are impatient in forex market, the market will teach you how to be patient. You don't need to ask people how can I be patient enough. I've seen people ask such questions and I'm like, okay, you want people to teach you how you can become patient. No one will ever teach you how to become patient in forex market. You got to teach yourself. Okay, bye.